Hello investors, it's Zil from Equitymaster bringing you investing insights to make investing simple and easy to learn. To stay updated on investing trends and the latest developments on Indian markets, don't forget to subscribe to this channel and like this video. As we see, the government is turning up the heat on public sector banks, asking them to fast-track IPO plans for their subsidiaries and joint ventures. Nearly 15 such entities have been shortlisted for market debut or strategic divestment in the medium to long term. The goal? Unlock value, boost governance, and tap public markets at the right time to maximize returns on state-owned capital. To get listing ready, PSBs have been advised to ramp up capital in their subsidiaries, streamline decision-making, and sharpen operational efficiency. The Finance Ministry also wants stronger governance and a more professional approach across the board. With the groundwork being laid, here are 5 public sector banks whose subsidiaries could hit the street soon. Before we move on, please note this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. With that disclaimer out of our way, let's get started. First on our list is State Bank of India. SBI Life Insurance Company is engaged in the business of life insurance and annuity. It was started as a joint venture between State Bank of India and BNP Paribas Cardiff SA. The company offers a range of life insurance products, including 23 individual and 8 group plans across protection, pension, savings, and health solutions. With the government announcement, the company might prepare to list 2 of its subsidiaries, SBI General Insurance and SBI Payment Services, as a part of a broader strategy to unlock value. SBI General Insurance, established in 2009, reported a net profit of 5.1 billion rupees in FY25. During the same period, the company allotted 3,71,693 equity shares of 10 rupees each, slightly diluting SBI's stake from 69.11% to 68.99%. SBI Payment Services Private Limited, engaged in the merchant acquiring business, is another potential listing in the pipeline. SBI holds a 74% stake in the company, with the remaining held by Hitachi Payment Services. As of 31st March 2024, the company had over 3.31 million merchant payment touchpoints, including nearly 1.37 million POS terminals, making it one of the leading players in the space. Both subsidiaries are in the process of scaling up. Operations and listings could be considered once the desired size and stability are achieved. Next on the list is Canara Bank. It offers a wide range of banking services for not just individuals but also for businesses and NRIs, including loans, savings, investments, and digital banking solutions. As of March 2025, the bank reported its global business of 25.3 trillion rupees. However, its loans are not very diversified: agriculture, retail, and micro, small and medium enterprises. The bank has already initiated the process to list its asset management arm, Canara Robeco Asset Management Company. In March 2024, Canara Bank announced plans to offload a 13% stake in the mutual fund entity via an IPO, with the board granting approval for the same. The proposal is currently awaiting regulatory clearance from the Reserve Bank of India, the Finance Ministry, and other authorities. Established in 1993 as Can Bank Mutual Fund, the AMC was restructured in 2007 following a joint venture with the Robeco Group and rebranded as Canara Robeco Mutual Fund. In addition, Canara Bank is also preparing for the potential listing of its life insurance arm, Canara HSBC Life Insurance Company. The bank has approved the dilution of a 14.5% stake in the joint venture, marking another move towards monetizing its non-core business. Next on the list is the Bank of Baroda. Bank of Baroda is one of India's top public sector banks with a strong presence across retail, corporate, and international banking. Backed by a legacy of more than a century, Bank of Baroda has consistently strengthened its market standing through digital transformation, growing its domestic and global footprint, and delivering steady returns to shareholders. Bank of Baroda is getting ready to showcase its insurance venture, India First Life Insurance, in the public market. This Mumbai-based insurer has been making waves as one of the fastest growing private life insurers in India. Bank of Baroda holds a controlling 65% stake, with Warburg Pincus and Union Bank of India holding the rest. They've got big plans for an IPO, looking to raise about 5 billion rupees through new shares and an offer for sale of 141.3 million shares from current owners. The market regulator had already granted approval for the IPO in March 2023, but company is carefully timing the launch, waiting for favorable market conditions. Previous IPO attempts were delayed due to regulatory and market-related uncertainties. The current plan is to possibly wait up to 18 months, during which the company aims to cross 300 billion rupees in asset under management and sustain double-digit growth, laying a strong foundation for a successful listing. Apart from the Bank of Baroda, Union Bank of India also holds a stake in India First Life Insurance. Next on the list is Central Bank of India. The bank is engaged in offering treasury operations, corporate and wholesale banking, and retail banking. It has over 4,545 branches, with the majority of them in rural and semi-urban areas. The bank also has 4,085 ATMs and 12,260 business correspondents. The bank has two key subsidiaries that could potentially be considered for listing in the future. Cent Bank Home Finance Limited, a housing finance company registered with the National Housing Bank. CBHFL focuses on providing home loans to both salaried and self-employed individuals, particularly in the affordable housing segment. Second, Cent Bank Financial Services Limited, a wholly owned subsidiary of Central Bank of India. CFSL offers specialized financial advisory and trusteeship services. While the bank has not officially announced any IPO plans, the government's recent push for public sector banks to unlock value through listing their subsidiaries could prompt the Central Bank of India to explore IPO opportunities for these businesses in the near future. Last on the list is PNB. Punjab National Bank is the second largest public sector bank in India, with a history spanning over 125 years. The Government of India is the largest shareholder since the nationalization of the bank in 1969. It plays a crucial role in India's financial system and economy, supporting individuals, small businesses, and large corporations. PNB MetLife India Insurance Company Limited has also been exploring an IPO, though it was previously deferred. The company is a joint venture between MetLife International Holdings LLC and PNB, offering a range of life insurance products across the country. Although the IPO plans were earlier put on hold, the listing is reportedly in standby mode. With the government now encouraging public sector banks to accelerate the listing of their subsidiaries, PNB MetLife could be the next in line to tap the capital markets once conditions are favorable. So, we see public sector banks' subsidiaries, particularly in insurance, asset management, and payments, are steadily building scale and heading towards potential IPOs. Backed by government support, improving financials, and greater regulatory focus, these businesses could offer long-term value to investors. The investor interest in PSU banks follow Finance Minister Nirmala Sitharaman's 27 June review meeting, where she urged banks to boost credit growth following the RBI's recent repo rate cut. She also asked PSBs to sustain their record FY25 profits. The government's expectations include sharpening focus on low-cost deposit mobilization, maintaining asset quality, and stepping up lending to productive sectors. While the fundamentals look promising, investors should still assess each IPO individually, considering factors like valuation, business stability, and sector outlook. It's always prudent to conduct thorough research before making any investment decisions. Ensure any investment aligns with your financial objectives and matches your risk tolerance level. That's it for today. Don't forget to like this video and share it with your friends and family and make them as smart as you are. This is Zil from Equitymaster. Thanks for tuning in.